Greetings, folks. This is DC Investing. I've reached financial independence and I want to share some of the knowledge I have with other folks and hopes to learn together. I've listened to a lot of podcasters and learned a bunch of stuff, so trying to just disseminate some of the knowledge. Today I want to talk about an ETF that I just learned about a week or so ago, and the ticker for this is MLPX. Don't get that confused with MPLX. MPLX is a pipeline master limited partnership, and MLPX is an ETF that owns pipelines, and it does actually own MPLX within it. So what's interesting about this ETF is it pays a fairly high dividend. It's about 4.5% dividend, maybe 4.4%. Which is lower than some of the other pipeline ETFs that I like, which is MLPA or AMLP. But this one has more pipelines within it. The other two own more of the master limited partnerships, but MLPX has a broader number of stocks that it owns within it. It actually owns not just the master limited partnerships, but the overall stock options. I don't know if they're S corporations or C corporations or whatever, but they're publicly traded companies. And so this one diversifies you a little bit more, even though it pays a smaller dividend. And so, like the MLPA has like Energy Transfer and Energy Production Partners and Plains All American within it. And MLPX also has those, but they add into it like Williams and Antero Midstream. I think Enbridge is in there. And those have increased quite a bit lately. The non-MLPs have done better on a price-wise than the MLPs have. But that's meant that their dividend has kind of come down a bit, and that has been baked into the price. So I was talking to a buddy, and he said that the who rates these things? Well, basically MLPX had a higher rating than the other pure master limited partnerships did, but I think it's primarily because the price of the non-MLP pipelines have actually gone up more on a higher percentage basis than the ones that are master limited partnerships. So, if these acronyms are kind of confusing, you can look up all these terms online and figure out what things they are. But it was just interesting. This is a more of a broad division ETF. You might find success in it. 4.5% dividend is really good. That's higher than SCHD. I like pipelines because it's critical energy infrastructure in our company. Our nation has to have this in order to move energy around. And with the AI companies that are looking for electricity for their data centers, natural gas is probably the only solution for them for a while until nuclear gets going, or solar and wind are unreliable. Data centers need always on power, and natural gas is a way to do that. So you'll hear things like various gas companies are running pipeline lines directly to the data centers. The data centers are buying natural gas turbines to power themselves directly. So that gas has to come through somewhere, and the pipeline ETFs, the pipeline companies are one of the only ways to get that. So a growth story there. We've got to have electricity. Pipelines provide the natural gas. And MLPX, I think it owns like 26 different companies within it. So it's kind of a good way to, own an interesting part of the utility segment. You can buy the utilities that actually make the electricity, but these natural gas companies and oil and gas are the energy moves in America across these pipelines. So check it out. Be curious, have any of you used MLPX before or something similar? What's your experience? Give a comment down below that might help our community. And overall, like and subscribe. And thanks for being a viewer.